Most people think VA loans are just about skipping the down payment, but there's so much more to the story. If you're a veteran or active duty service member, this loan could be your best path to home ownership. Stay to the end as we explore some of the biggest VA loan benefits that often fly under the radar. If you're not a subscriber, now is the time to hit the subscribe button. Make sure to comment down below with any questions you may have. With that, let's get into it. I'm here with Lindsay. Lindsay, how you doing today?
Great. How are you, Joe?
I'm good. I am good. I love the VA loans.
I was just going to say that. I absolutely love talking about VA loans.
Yeah, I mean, we are, as a company, we're veteran-owned, veteran-focused. So we love working with veterans.
Especially being on the Space Coast.
On the Space Coast, correct. But, we do loans everywhere in Florida, just to put that out there.
Yeah.
Okay.
So the first thing that you said kind of in the intro was no down payment, but that's just the beginning, right? So How does this work? Can you go into a little bit of detail about that?
Well, the down payment, typically loans require some kind of down payment. Most other loans do. There's maybe a USDA loan or some other non-conventional, non-conforming type loans.
Right.
But for the most part, VA is the main one. That does no down payment requirement. Now you have to be eligible, like per the VA,
right?
Per the VA guidelines, and you have to be qualified. They don't just throw out, just because you're eligible doesn't mean you're qualified. You still have to qualify for that loan.
Yeah.
But no down payment is required. And there is no maximum loan amount. Most lenders will cap it maybe at $2 million or $3 million, who knows. But technically, there is no maximum loan amount on a VA loan for 100% financing.
So you can have a jumbo loan.
Correct.
With no down payment.
Correct.
Gotcha.
If you're a veteran and qualify and are eligible,
asterisk.
There is no max loan amount. If you want to buy that $1.5 million house and you qualify for it, and you technically don't need a down payment.
Yeah, that's incredible.
It is an incredible loan, but that's just one of the 5 and maybe a 6th bonus feature we're going to talk about.
Cool. Well, number 2 is private mortgage insurance, often referred to as PMI.
Yep.
How can this benefit a veteran client?
So no private mortgage insurance. There's no monthly mortgage insurance. So typically, if you put down less than 20% on most loans, not VA, but on most loans, you're required to carry mortgage insurance. And that can be paid, typically it's paid monthly, a monthly amount.
Yeah.
And on a VA loan, there is no private mortgage insurance, no PMI, no mortgage insurance at all. It does have a guarantee fee that differs depending on how much you're putting down and how much, if it's a first-time use or a subsequent use. But it still ends up to be a lot lower in the monthly payment. And if you're deemed more than 10% disabled by the VA, there's no funding fee.
That's incredible.
That is incredible. It's a benefit, but going back, the main benefit of not having no PMI, is that it just will reduce that overall expense on your loan.
Wonderful. Well, the third one, I got a little bit confused on this, so I'll need your help. It said competitive interest rates better than conventional loans sometimes. What does that mean?
Well, there's conventional conforming loans that you've heard of, like a Fannie Mae or Freddie Mac loan, your standard bread and butter loan.
Sure.
The rates are typically, not always, but typically just a little bit higher on those than they are in VA. And the reason is that the VA, because they provide that guarantee to the lender, the VA does, the Veterans Administration. The Veterans Administration offers that guarantee to the lender.
Yeah.
That because it's less risky to the lender, the rates are going to be just a little bit lower than they will be on conventional. So, it is a fantastic loan.
Yeah. The fourth one that we had was flexible credit requirements. Is it easier to qualify?
The credit, so major credit events like a bankruptcy or foreclosure, the waiting periods are less on a VA loan than they are a conventional conforming loan. Okay, so it's a little less stringent on the borrower in those means, and the debt to income they're a little bit less stringent on. Not because the VA doesn't care, it's because they take a more holistic look at the loan and they say, if you make this much money and you have this much left over, it's called residual income after you pay all your things, and there's some kind of a maintenance fee attached to the size of the house you're buying and how big your family is. And there's some other factors involved, but they say, look, if you make this much and have this much left over or more, then you can exceed the regular guidelines. And, we've seen debt to incomes that exceed 50 and even 60% sometimes.
Wow.
But it has to make sense. The overall picture has to make sense. And VA does have a very low foreclosure rate. So they do over time, but so they do, it doesn't make sense.
Yeah. Next one for you was loan benefit can be reused. It's not just a one-time deal. So what does this mean?
It means that some people think you can only use your VA benefits one time.
So this is the not the assumability. This is the what's the word I'm looking for?
I think you're looking for the word. I don't know what word you're looking for. I don't read minds yet. But this is, you're talking about the eligibility.
Eligibility, correct.
Yeah.
Sorry.
So with a VA loan, people think, okay, I've already used my VA loan, so I probably can't use it again. Not true. You can use your VA loans multiple times. You just have to get back your eligibility. So that's something that is processed when you sell a house or you refinance out of a VA loan. You can. Now the word's escaping me, but
I rubbed off on you. Sorry.
You did, but you can actually use your eligibility more than once. And here's a little known fact, and this is not even the bonus one we were going to talk about, but with a VA loan, you can actually have more than one at a time. And a lot of people don't know that.
Gotcha.
That's with your bonus entitlement, it's called. You can have more than one VA loan at a time. Now it has to make sense. And typically that's because maybe someone has they were at the Minot Air Force Base, right? And then they're going to PCS somewhere else, and then they want to keep that house there, or maybe they can't sell it, right? And so they're going to keep that house and they want to buy another house here. Well, there's a formula we can fill out to see what is your max loan amount. It has to be a minimum of $144,000
okay.
with your bonus, if you're using bonus entitlement. And then depending on the max with no down payment, it's going to be how much eligibility you've already used up on your certificate of eligibility, which will show all these things.
Gotcha.
Yeah.
I didn't even think about that too. Like, what's the market where you're trying to sell your home? If it's not necessarily the best time for you, you can still hang on to that house.
Hang on the house. You got to qualify for both payments, but maybe you put a renter in there, another active serviceman, or woman, and put them in there, and who knows? But you can rent the house out until maybe you do want to sell it, or maybe you hold on to it as an investment property.
Yeah. Well, you had mentioned a bonus.
I did.
So please don't keep us waiting any longer.
Okay. So one of the big features of one of the many features of a VA loan is what we call an IRRL, interest rate reduction refinance loan. Okay. Interest rate reduction refinance loan, IRRL. IRRRL.
IRRL.
And so basically, if you do a VA loan and down the road rates go down, maybe a year, 2 years, 3 years later, rates go down, and it makes sense to refinance. And the VA actually defines what makes sense, because some unscrupulous lender might tell you it's a good time when it's not.
Sure.
But the VA's put strict guidelines on when you can refinance. And there's low documentation. As long as you've been making your mortgage payment on time for a year, typically they look for a stream of income, but they don't look at things like debt to income typically. They don't look at the house appraisal or not. They just want to see that you've been making your payment on time. And even if the house is an investment property, you can still do this. And so if you've been making your payment on time, and if you can benefit by a lower interest rate, then they'll let you do an interest rate refinance or interest rate reduction refinance loan, an IRRL. And it is a big benefit that not a lot of people know about.
So essentially, you don't have to jump through all the same hurdles that you did when you initially got the loan.
If you can better your position, they're going to help you do so. And we do a lot of those for our veteran clients, and it is a great, easy, fast loan.
That's fantastic.
Yeah.
Good bonus. I like
good
that
bonus.
one.
Yeah, thanks. Well, good. Any more questions?
That's all I got.
Cool. If you have any questions, comments, anything, put them down below. There's some contact information for us down below. If you want to reach out to us, we have our information for our website, the contact information. And with that, thanks for joining us today. If you're not a subscriber, please like, subscribe, share, do all those things, and we'll see you next time.